Hello and welcome to another. So now in this class, we will check out the sources of finance for the industries. Okay. So that is the industrial finance. So the meaning is the amount of finance for both the fixed capital requirements and the working capital requirements. Fixed and working capital needs. Finance is the main thing, isn't it? In order to continue or carry on their productive activities. So to carry on their production activity. So that is what is known as industrial finance. So different kinds of industrial finance is available. Different types of institutions. Some lend for fixed capital, some lend for working capitals. That is, some lend for short term. Some of the financial institutions lend for long term. Some of the, in the sense that they underwrite the shares of the company, they guarantee the shares of the company, or they lend direct loans to the industries. So like the different ways or different types of capital or loans are provided by the different kinds of institutions for industries. Okay, so let's see what are all the major source of industrial finance available in India. So first and foremost source of in the order of importance, internal self-finance. That is, whatever the finance, that is a savings retained by the industries on their own. So it is basically the internal savings by the units themselves, or they get indirectly from the households. Households, they where do they save? They save in the banks, and so those savings are channelized through investment. So they get their funds from the households indirectly, the savings of the households, and the business units themselves, or from the government. So this is one of the major source of finance for the industries. Then the second one is through the issue of equity, debentures, and bonds. So they can issue their shares in the open market. So for the short-term finance, so in order to meet the short-term requirements, so short-term finance, it is made by most of the industry. They issue their shares in the open market, provided they are reputed ones, through the issue of shares. Different kinds of shares are there, isn't it? Ordinary shares, cumulative shares, or preference shares. So the issue of shares, mostly it is issued in the open market, and it is mainly for the short term, to meet the requirements, short term requirements of the industries. And the long term finance, they are mostly met by issuing debentures and bonds. So this carry a fixed rate of interest. Unlike the shares, they carry a dividend according to which varies according to the performance of the industries. Whereas the debenture holders and all, they they are the creditors of the company. By issue of shares, if somebody purchases the shares of the company, they will become the shareholders. So according to the profits, the dividends will increase. But whereas the debenture holder, they are like a creditors of the company, they receive a fixed rate of interest, irrespective of the profits of the company. So by issuing shares or debentures or bonds in the open market, the long-term financial requirements of the companies are met. So that is the second major source of finance for the company. Then the third one is the through public deposits. So sometimes some of the companies, they receive capital through, if the public is wishing to deposit their money in the company, but this is mostly for short-term requirements, because the public will not be taking the risk of depositing in the industry. That much risk they won't take. So this is from deposits from the public, and this also carry a fixed rate of interest. Fixed rate of interest, and mostly this is for short-term requirements. For short-term finance, ranging from 6 months to 3 years. So that is the next source of finance for the industries. And the fourth one is they can obtain loans from banks and other financial institutions. So basically, the short-term loans are made by, made by the commercial banks. So the short-term, normally the commercial banks, they don't prefer to lend loans for the long term, and they don't also prefer to invest on the shares of the company. So they lend mostly the short-term credit. So the short-term finance or loans, short-term finance or loans are made by the from commercial banks, and they lend loans against the stocks of the company or the government securities, against stocks of the company or against the guarantees of the government securities. And this is the commercial banks. Loans are lent through most common practice. The way in which the commercial banks lend loans are either through overdraft. They allow the businessmen to, especially the current account holders, to draw more than their available balance, or otherwise they open an account in the debtor's name and the company's name, and they keep depositing the amount. There is a cash credit. So these are the two are the most popular methods through which the commercial banks lend loans to the companies. Okay, so that is a fourth source of finance for the industries. And the next, not very popular nowadays, but earlier, once upon a time, it was very, very popular. That is known as the indigenous bankers. So indigenous bankers, they are mostly like a money lenders. So because they cater mainly to the small scale industries, mainly to small scale industries. The problem is, since the small scale industries are not able to get proper credit or proper financial assistance from the banks and other financial institutions, just like how the farmers are facing the problem, the same problem is felt even by the small scale producers. So they find it easy to obtain loans from the indigenous bankers. They are like a local money lenders. So this is mainly to small scale industries due to lack of credit from banks, because the banks, they normally prefer to lend loans to large scale industries. So like money lenders, they also charge a high rate of interest. Like money lenders, they also charge high rate of interest. But nowadays the government has established specialized financial institutions, special financial institutions to lend loans to small scale industries. Now, because of that, the role of these indigenous bankers are decreasing. High rate of interest. And the next is the foreign capital. So the foreign capital can also take so many forms. This is for, again, long-term needs. So there are several forms are there, forms of foreign capital. So first, it can be in the form of foreign aid. So foreign aid, the country can get loans from foreign governments or foreign institutions like World Bank, IMF, etc. So the main feature is on concessional terms. So that's why it is more or less a aid than the foreign capital. So some kind of concessions will be given to the country, which can be directed towards the, for example, World Bank and all provides the foreign assistance for in the form of for the development of infrastructure facilities in the country. So all these can be got from the either directly from the foreign governments or from the foreign institutions like all these World Bank and all, and it will be based on the concessional. A lot of concessions will be given in the, most of them they will carry a very low rate of interest. The repayment will be very, very long. So many concessions will be associated with all these kinds of loans. So that's why it is more a foreign aid than the foreign loan. That is one form of foreign capital. If that amount of foreign money, that whatever the foreign exchange reserves received in the form of credit or loan from all these institutions, if it is directed towards the development or the expansion of the industries or the expansion of infrastructure in the facilities, all those things, then it will turn into a foreign capital. Okay, then the next form of foreign capital is, that is the most popular one, FDI, that is foreign direct investment. So foreign direct investment from foreign companies. So the foreign companies can directly invest in the domestic company, and they can form a collaboration. So that is the second form of foreign capital. And the third one is the availing capital from the non-resident Indians, because they are all having the foreign exchange reserves, isn't it? So it is possible to get the capital from the, if they want to invest in the domestic company, so capital from the NRIs. And another method is the domestic companies can raise loans or raise capital by issuing their shares in the foreign open market, just like how they are raising capital in the domestic market. The same way, our domestic companies, they can also raise their shares, issue their shares and raise capital or loan by issuing the shares in the foreign market. So issue of shares and raising loans through issue of shares in the loans or capital. Issue of shares in the foreign market by the domestic companies. So after globalization, this has become very domestic company. So this has become very easier to raise capital from foreign countries also. So because everything is countries without any borders, isn't it? Free flow of capital, free flow of technology. So that is what is globalization. So it has become very easy for the domestic entrepreneur to issue their shares in the foreign markets also. So these are all the various ways the foreign capital can be obtained. Okay. And apart from all this, we have the something called as the development finance institutions. So the next one is the development finance institutions. So they are also called as the term lending institutions. Term lending. So some of the institutions are specifically established, developed in the country in order to provide financial needs of the industrial sector. To mainly to provide the loans or credit to the industrial sector, certain financial institutions have been established in the country. So over a period of time, even though they started for the purpose of lending loans to the industrial sector, over a period of time, they have also entered into the commercial banking activity. So now most of the institutions, they do both the things, lending loans, credit to the industries, as well as they involving in the activities of the commercial banking. Okay, so they are also called as the term lending institutions. So these are all the specialized financial institutions established by the government to lend loans to industries. So under that, the first one is the Industrial Development Bank of India. That is IDBI. So IDBI established as an apex bank. Apex bank in the sense, just like RBI is the apex bank for the commercial banking, IDBI was established as an apex bank for the industrial banking. So as an apex bank in 1964. So the mostly IDBI lends long-term loans for called as the greenfield project. So greenfield project means green technology that without any pollution. So whichever industry is undertaking that kind of project, that kind of technology, that involves a huge amount of expenditure. So in order to introduce a technology that is green technology in their method of operation, that involves a huge amount of expenditure on the part of the industries. So IDBI specifically lends loans for those kind of industries who want to use that kind of technology. So that is a greenfield, any greenfield projects. So for that, it provides the long-term loans. And apart from that, and also for modernization. So if the industries want to modernize the techniques of production, if they want to expand their business, diversify their production. So for all those things, IDBI is providing the financial assistance to all those industries, expansion and diversification. Okay, then the second, industrial finance corporation of India. Even though it is the first financial institution established for the purpose of lending loans to industries immediately after independence, IFCI. Okay, so this is the first financial institution, like this, first financial institution established in 1948. Okay, and the main purpose is, main aim is to provide both medium and long-term needs. So medium and, this is the aim, long-term financial needs to the of the industries, long-term loans and advances to industries. Okay, so this is the beginning of the IFCA, the beginning of the term lending institutions in our country. And recently, that is so recently in the sense, I mean, afterwards, IFCA is being converted into public limited company. So converted into a public limited company. So, and it is now called as the Industrial Finance Corporation of India Limited. So I think you remember what is the meaning of public limited company. If the shares are floated to the general public, then that from being a corporation, it becomes a public limited company. So this was done in July 1993. So from Industrial Finance Corporation of India, by floating the shares to the general public, so it turned into a Industrial Finance Corporation of India Limited. Okay, and this IFCI, through its various subsidiaries, some of the functions it provides is the it provides custodial services. So acting as custodial services means acting as a custodian, I mean, safe security of all the stocks, bonds, and other assets of the company. So by how Reserve Bank of India, how the banks, commercial banks are acting as a custodian of our deposits. So we are maintaining the deposits with the commercial banks, isn't it? So the commercial banks are acting as a custodian of our deposits, of our funds, of our money. In the same way, IFCI acts as provides the custodial services by keeping the safe custody of all the stocks, bonds, and other assets of the companies, either in the physical format or in electronic format. So they provide the custodial services. So that is what we want. Meaning is keeps safe custody of the clients, that is the industries or the customers, stocks. Customer here is industries, companies, firms, stocks, bonds, or other assets in electronic or physical format. And apart from that, it provides the investors services. Investors services. So investor services means it is acts as an agent to the customer. Acts as an agent to the customer, that is the industry or the businessman. So like, say for example, dividends, reinvesting the uh, capital of the company. So like that, like in the matters of dividends, reinvestment of the company funds. So all those things. So that is investor services. So it is acting like an agent. So directing the funds of the company to wherever it is profitable, reinvesting on all those things. So those kind of services are done by the IFCA. So that is why it is acting as a agent. And apart from that, it also undertakes something called as the it lends loan for something called as the venture capital. So venture capital means anything it is there are certain risky ventures out there which the commercial banks or other some of the financial institutions will not come forward to lend loans. Only is very specified financial institutions will undertake this operation. So that is the IFC is one of the financial institutions that undertake that venture capital. So lending loans for that. So that is investing on a project where it is considered risky. For any new businessman, I mean, it is not very risky, isn't it, to lend loans, whether the business will survive or not. So for all those things, central IFCA will provide the financial assistance. It's considered risky. So that is the venture capital. Okay, so that service is also provided by IFCA. Then the next institution is industrial, popularly known as ICICI, Industrial Credit and Investment Corporation of India. So originally, ICICI was started as an institution to lend loans, financial assistance for the industries in the private sector. Because at that time, there were no financial institutions which are catering to the financial needs of the companies under the private sector. Whatever the existing industries, they were catering the needs of only the public sector units. Okay, so in order to facilitate loans for the private sector financial needs, originally ICICI was established for that purpose. Okay, and and later on they merged into a commercial banking also. So the main specialization of ICICI is specialized in facilitating. So you can mention that it is a leading private sector bank. ICICI. And it's specialized in facilitating mergers and acquisitions of industrial concerns. ICICI lend loans for any mergers and acquisitions of the industrial concerns. Okay. Of industrial concerns. And the next one is the Industrial Investment Bank of India, IIBI. The Industrial Investment Bank of India, originally it was started in 1971 as IRCI, that is Industrial Reconstruction Corporation of India. So this is basically, it says the Reconstruction Corporation of India, basically to rehabilitate all the sick units. So the one for that purpose, the government wanted to establish one financial institution. So it was 1971, IRCI was incorporated, that is Industrial Reconstruction Corporation of India, then in converted into in IRBI, that is Industrial Reconstruction Bank of India. Also from expanded its role to the banking activities also. Originally it was only for reconstruction. Later on it entered into the banking activities also. So it was turned into IRBI in 1985. Then afterwards it became the investment banker also. It became Industrial Investment Bank of India in 1997, but it is mainly for short-term loans. So invest for the short-term purpose, mainly for short-term finance. And finally, in 2012, IIBA was closed because the government of India proposed its merger with the Industrial Development Bank of India and Industrial Finance Corporation of India. But the IIBA they refused to merge with these two financial institutions. So finally in 2012, the government closed the Industrial Investment Bank of India. Okay. Then the next one is the Infrastructural Development Finance Company Limited. So the name itself says this is mainly for projects that are involving for the development of infrastructural in the country. So it was incorporated in 1997. So for facilitating infrastructural projects from mainly the specialized thing is from private sector, foreign sector, apart from government. So the one of the functions of Infrastructural Development Finance Company of India is to motivate or encourage the private sector infrastructural projects, because normally the private sector they will not come forward to develop the infrastructure in the country, isn't it? So in order to encourage the private sector to share the financial with the government, so this one was floated incorporated for that purpose. There are so many infrastructure like energy. So some of the infrastructural facilities, and apart from also private sector is encouraging the foreign participation also. So infrastructural facilities like energy, telecommunications, IT. See, these are all very much etc. Even for the private sector to run their continue their businesses, these are all very, very essential. So they will also, if any financial institution is available to lend loans to them, so they will also come forward to invest in for the development of all these facilities. And finally, we have Small Industries Development Bank of India. Bank of India, popularly known as SIDBI. The name itself says it is the bank for lending loans for the small industries. So it is an established as an apex bank for credit financial assistance to small industries, financial assistance to all the small scale industries in the country. So originally it was in IDBA was having a separate department to lend loans to the small scale industries. And in April 1990, that department was delinked from IDBI and became the Small Industries Development Bank of India. So it provides direct financial assistance as well as the refinancing assistance. So any, like for example, State Finance Corporation and all, they lend loans for the small, short-term and medium-term, and also for small-scale industries. So any financial institution is lending loans for the small-scale industries. SIDBI, they can get the accommodation from the SIDBI. That is, it provides the refinancing assistance to those institutions. So refinancial assistance at the state level by rediscounting the bills of exchange of those financial institutions. And as an apex bank, it also undertakes the coordination of all the other financial institutions which are involved in the lending loans to the small scale industries. And also it also involved in the promotion and development of whatever measure that has to be taken for the development of rural areas. So if any financial institution is undertaking activities for the development of rural areas, all those things, activities are coordinated by SIDBI, Small Industries Development Bank of India, because it is an apex bank for the development of small scale industries. Okay, so now these are all the various source of finance, various industrial finance for the country. Okay, so with it, your 6th chapter is over. Okay, so if you find this video useful, please like, share, and subscribe. And if you have any doubts, please don't fail to mention in the comment box. Okay, so until my next class, take care. Bye bye.